Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Thursday, February 11th, 2021. I'm going to start out with the broad markets. Just yesterday, I said I'll do, cut back a little bit on the frequency updates there, but that's also going to be commensurate with the, any developments in the market. In other words, if you're seeing things, which today, that's why I'm doing this video right now. I want to point some levels out where it's some pretty key support levels on a couple of the market-leading stocks that I've been watching lately and talking about, namely Apple and Tesla. All right, so we'll talk on those real quick. Quick update again, since I've been covering it quite a bit lately. Same story on SPY breakdown a couple weeks ago, back testing the trend line from below. Big divergences continue to build on the daily chart. Also no sell, well, that would, again, sell signal there in a back test, so an objective short entry if you want to call it, but what we really need to see is QQQ follow suit. This is what SPY looks like on a 60-minute chart. There's a trend line there off the early November lows. There's your breakdown back test. So this is the same thing we're looking on the daily chart, but zoomed in a little bit here. So, we're still right off all-time highs. We just went negative a little earlier. We were positive, but again, I want to cover some of the key levels to watch. So that's SPY. Really, we've already had the breakdown, the back test. So if I had to, figure a level that might trigger some more selling today, I'd say it's right about here. There's some minor support. You can see all these reactions right about the low of the day so far, roughly 386.50 right there, or 388.50 that is. But more importantly is QQQ. We have, this is a busy chart, a lot of lines, but here's the thing, the divergences, we had a divergent high here, we had a correction. You can see I had a primary trend line right there, which was broken and back tested for a while. We're still below it, and we had a divergent high at that point, but we put in extended that same divergence. It's only grown larger now. I don't have a clean up trend line to give you there. Support, if I had to pick a level that might do the trick, finally get us some decent selling, I'd say 330. That level has to go. Look for a break of 330, and that's what it looks like on the daily chart. We're still well above that trend line. That would be a much more powerful sell signal if we break this trend line here with a solid, a very solid intraday break that looks like it has little chance of, snapping back before the close, or a solid daily close below that line. Okay, so that's that, and then IWM, I might as well just cover that today. We're seeing a little more selling. We had a red candle in IWM yesterday. Nothing big. They come along during an uptrend. But again, when you have divergence that continues to build, negative divergence, you had it here and you had a little pullback. You had it here and you had a little pullback. And this is the same divergence line continuing to extend. And typically the pullbacks get a little bigger each time. And that, pullback now, should these divergences play out, should take us at least to this minor uptrend line here. And because they're so large now, certainly have the potential, if that breaks, to take us quite a bit lower. So that's what IWM looks like on the daily. This is a 60-minute chart. Nice, clean little short-term uptrend line right there. Actually, I need to tighten that back up right there. So we're under this minor trend line here, following this divergent high, and you can see some potential targets. So I'll tell you what they are: 215.80 and that intersecting uptrend line right there. That's a minimum target. And that would be about a 4.25% drop in IWM, and then these are all additional potential targets. So that's what the indexes look like. On a related note, let's talk about the volatility indexes. The VIX. Let me give you my clean, simple board right here. This is the clean board, very simple. What I'm watching. This is big support on the VIX right here. This yellow line. Let me give you that number. Turn on, that's about 2022, and it's big support because we've just had a lot of reactions. Those major reactions here, big old gap right there, reaction from below. So it goes back a while, and especially most recently, when you put a higher weighting on support levels if you have a lot more reactions recently than in the past. But again, we go back all the way to 2019 here, quite a few reactions. So we continue to bounce off this. A break of that would most likely coincide with a powerful thrust to new highs in the market. We've been inching higher and higher lately, but that could bring us down to a new low range in the VIX. Otherwise, the MO lately has been you get a correction in the market, you're going to have a rise in the VIX. So another way to say this, the thing about the VIX is it can stay low for a while when it falls to support. So why normally I'll say it would be an objective entry, in the sense that you're buying at support with a stop below it is. But if you wait for the sell signals I'm about to go over on the market on some of those key stocks, I think that will increase the odds of the next leg up in the VIX. Several times we've gotten up to about this range here, and that would be a swing, certainly an initial swing target with the potential for more, again, depending on what happens. But let me show you a couple others. The VXN is the VIX, or the NASDAQ Volatility Index. And here's the levels I have. I highlighted this one recently. Same thing, just bang up support right there. I mean, it doesn't get much better than that. This is way back in 2019. A lot of reaction highs from below. We finally broke out. When we broke out, we didn't just meander around. We exploded higher. That's what happens when you break resistance, a well-defined resistance level. Resistance, once broken, becomes support, as you can see, and has been great support. So there's the story. The NASDAQ Volatility Index is at support, and that support could break. That's certainly a possibility, and if so, the next big support level is all the way down here at about 1463. The one that we're at now is about 2555. However, what indicates it will likely bounce off this support and rally soon is the positive, or are the positive divergences in place, just like we had positive divergences here, just like we had positive divergences right there as we fell down to it at that level. Actually, this was more of the divergence here. It extended for a while. We had a little divergence there, a little pop, another divergence, still had divergence, another little pop. That divergence got bigger with these equal lows as the indicators were making higher lows, and then an even bigger pop, which coincided with the correction in the market. And these are the two corrections we had earlier in the year. So that's it. Positive divergence there. Launch was the precursor to that huge rally right there, and that's when we dropped in the March lows. Little divergence there. And these little moves here are 70%. In that case, usually from the top to bottom of that range, about 70%. That's where we are. I just wanted to point out we're at support. And then one of the many trading vehicles for the VIX is VXX. You can trade. You can't trade the VIX directly. That's the spot index, the one I started with, VIX. But you can trade any these several ETNs that track it, or the futures that the ETNs buy. The pure play is to trade the futures. You can buy those directly if you're a futures trader, and if you are, you probably already know that. Or you can buy options on those futures, or you can buy one of the ETNs that track the futures. So those are really your three proxies for directly, or as close to directly trading the VIX as possible. And the other thing, of course, is just to short the market. The VIX goes up typically when the market drops. But again, I just wanted to reiterate that is a bullish falling wedge pattern. We're at the bottom of the pattern, and again, it's these divergences that indicate that we may go on soon to break out above that wedge, at least maybe rally up to the top of it. And if so, that would almost certainly coincide with a drop in the stock market. Okay, so that brings me to the point of doing the video now and doing another update on the markets. The big ones that I'm watching in the NASDAQ 100, I'm going to watch a lot of different things, as you know, but lately I've been focused on Apple and Tesla as far as market leading stocks go. I've always referred to the top five components of the NASDAQ 100 as the FAANGs, FAAMG. And now Tesla, because of their market cap, they're right up there with them. So I'm going to include, I call them the FAANGs+T, or whatever you want to call it. Got to include that one in there now. And there's the trend line that I've been talking about on Apple. Apple reported back here. That little arrow was the day of the earnings, and the stock sold off after the earnings report, still below it. And it also fell back down below the top of this trading range that's boxed in the shadowed area here, but only by a relatively small margin. So it can still go either way. But as I've been saying for a while, if we break to the downside, which I suspect we will, that'll be a sell signal. That would take us down, I believe, to at least this 125.75 target. and quite possibly more, especially if that level goes. And we see, of course, some of the other FAANGs also come back in price. So there's Apple right on the trend line as I'm doing the video, and that's why I wanted to mention that right now, because that could go at any time. Once you get close to there, you got to be on lookout for a breakdown. So it's either, the buyers will either step in here like they did last time. I mentioned it, and look, if I said back here, said if I was an Apple bull, I would buy a pullback to this trend line, and we got to bounce off it. That's where they should have stepped in, and they did. But guess what? So far, the bounce was relatively muted. In fact, it took the stock right back to resistance, that top of that trading range at 138.36. That's defined by these major reaction highs there. Another one there, and then we broke out right after, broke right in front of earnings. This is why you dismiss or put a very low weighting on any breakouts or breakdowns, buy or sell signals that occur just before a company reports, because that earnings report has the potential to completely foil any breakout. So that's what's going on with Apple. That's one to watch. The other big one is Tesla. Tesla, there's the arrow marking their, the day they reported. They sold off after earnings as well. Again, nothing big. I'm not trying to spin that as uber bearish. I'm just bringing a point that the majority of the FAANG stocks sold off and remain below where they were before they reported earnings, and Tesla included. And to me, the big level is about 800. That line says 802. We'll call it 800. And you say what you want about Tesla or where you think it's going and where I think it's going, but it's hard to argue this is not an important support level. We have, the stock is traded on that 800-ish level now for going back here all the way until, broke out right above it on back in the beginning of the year, January 8th. So that's it. Tesla breaks that. Apple breaks down, that's going to be bearish. If Apple can rally off the trend line that it's on, support it's on right now, and Tesla can rally, especially if both can take out their previous highs, well, that can't be spun as anything but bullish, at least as long, until unless that breakout fails. So this is what I'm on watch for today or tomorrow or next week or next month, as long as we're, flirting with this support level and testing it. And of course, I'll always keep an eye on the other market leaders, Microsoft included. Microsoft was one of the strongest FAANGs after earnings. They reported there, and they had broke out just before earnings. They broke out of this multi-month trading range. Remember, these trading ranges go all the way back to June of last year. And so far, so a breakout's a breakout unless it fails. What has happened is Microsoft took out this minor uptrend line. And so, you want to firm up the case for a pretty decent swing short. You want to see Microsoft fail this breakout, meaning move solidly back below 226, as well as this uptrend line that's comparable to the trend line Apple's testing right now, right there. So it works like this: support 1, 2, and so forth and so on. And of course, a longer term depends on what happens. Like I said, I think the trend has been extremely resilient. It's still a bullish trend, make no mistakes about it. I've been talking about these potential but untriggered sell signals for a long time. But if they happen, I suspect it'll be a swift drop. So when I say longer term, it's all relative, or it actually could be shorter term. So one thing that I can say is stocks tend to fall faster than they rise. So this could be more near term if we break below the bottom of the trading range, is what I was getting at there. That would be quite bearish. That's multi-month, again, going back to June of last year. And I think that would be uber bearish and open the door for a much deeper correction in the stock market and Microsoft, if and when that happens. But as of now, it's support. Like I always say, support is support until unless broken. So if you're bullish, there's all your levels that you can step in if you want to buy Apple. Microsoft, if you believe Microsoft's going much higher. And there's Amazon. Amazon post earnings had right before the report had popped that trend line, but again, didn't mean anything because it happened right before they reported. As with the majority of the FAANGs, the stock has sold off. The arrow shows you the day they reported. Then the reaction to earnings when the stock opened the following day, that big red bearish engulfing candlestick. Not the ideal confirmation because we had two green candles, but it has not been invalidated. I'm talking about the bearish engulfing as a potential topping candle. It engulfed that previous doji right there, the previous candle. And as long as you don't take out the top of the candle, it remains a potential topping stick. Again, not the ideal action with two green days after, small green days, but nothing but selling sense, and we're now well below that candle. So, again, is that a hard sell signal? No. What would firm up the case? More downside. Like I always say, the redder the better. So if we keep dropping, get farther away from that bearish engulfing, and then break this trend line here. There's an uptrend line that forms a triangle, and the bottom of the trading range is in yellow. That's the big level right there, 29.43 and change. Okay, so as far as trade ideas go, still not finding a lot of attractive risk reward profiles on the long side recently. A lot of the trades that have been highlighted in recent months have already run their course and maybe then some, as I said. And there's other sectors, like I warned yesterday. I think, the pot stocks were, to me, a screaming sell. Big resistance. Here's Tilray. Same levels. I've had this line here forever. It was tuned down. I had the color down. I have to brighten it up. This is a trend line that I had put on Tilray back in 2019. Last updated that trend line back in February of 2000, or earlier this year. No, that's today because I just changed the color. No, so I hadn't updated that for it was last year until now. And look, hit it almost to the button, and the stock's down 42% today. So this is what I'm talking about. This kind of insane thing. We're seeing a lot of these trash stocks start to get hit pretty hard. We already saw, the run in GameStop, and AMC is over, and a lot of those, and I get it. The Reddit crowd move on to the next one. But they've been in these humping these stocks up way beyond any reasonable valuations. But more importantly, that's never a reason to short. The reason to short, or get out, I should say, when crazy, we got to be careful shorting these guys, especially when the momentum's strong. But again, majority of the ones that I track, I'm just going through the largest losers today. And they're all these marijuana stocks. These are all lines that I've had on this, board. This one was last created back in 2016, and that's where we hit it almost to the button. That's you probably can't see it there, 21 cents. And so that was a common theme in the video yesterday, that the majority of the pot stocks that I track we're all running into resistance, and that was, if nothing else, a reason to take profits. So. Or not buy them. Hopefully nobody stepped in and bought those yesterday, because all of these guys are down 20 to 50% today. Okay, well, those aren't trade ideas, but what is, or what are? Just a few. I found a couple, but they're short setups, and one potential long setup I'll get to in a second. This one came across my radar today. FUV. That's Akramoto Inc. It says they're in the recreational vehicles market. I'm not sure what they do. Not familiar with the company, but the chart, to me, clear negative divergence right here forming. So we've just put in a divergent high, and there's a nice trend line in which to trigger a sell signal or an objective short entry. And ultimately, I think this one will come back into this 876 level right there, at least, potentially down to 531. That positive divergence here was the catalyst for the big run up. So wash, rinse, repeat. Here was a trend line break, but that trend line break, we didn't have a divergent high. We didn't have any divergence on the indicators, and it was still good for a correction from when the trend line broke. Was still good for a quick 32% drop. So therefore, my expectation on this one next time around would be much larger than a 32% drop from where we're at now. If we hit that 870, 880-ish target, that's about a 68% drop. Another one that stood out is Grow. It might sound like a cannabis stock, but it's not. This is U.S. Global Invest Class A shares. This is asset management company, and wash, rinse, repeat stuff. A little divergent high, bearish rising wedge right there. You see negative divergence, drop. That set up a much larger, more powerful bullish divergent low right there, and that was a catalyst for this rally. So that it's been a heck of a rally, and in between there's been corrections, as identified in advance by these divergent highs, negative divergence, and the drop was about 42% on that one. And we didn't, yeah, we hit support, very good support, about 227. You can see that support line rallied up here, and we've come full circle. The stock has put in a divergent high. Don't have a sell signal, and the divergence is not confirmed, but we are at resistance. So there's a case to be made to short it at 750 right here. That's that previous reaction high from late 2017. And again, with the divergent high, and also what appears to be a buying climax. A buying climax is when a stock has been in a strong and pretty extended uptrend, and all of a sudden you get a surge of volume like this. That is indicative of a buying climax, aka blow off top. So plenty of a case can be made to short that. And again, where do you put your stop? Well, it all depends on what you're targeting. You can use a risk-reward ratio of 3 to 1. And so if you're targeting a 50% drop, you could easily give yourself a 15% stop loss on that one, and you're at better than a 3 to 1 RR. And if a 15% stop loss sounds crazy, you say, Randy, I only allow 5-8%. Well, give yourself that 15% stop loss, but take a 1/3 position size. In other words, if you normally short $30,000, short 10. Why? Well, number one, you're going to lose the same dollar amount as you would on a 5% stop loss on a $30,000 trade. It's all about dollars. What does it matter what the percentage gains? It's the dollars that are going to either make you or break you. And likewise, if you hit your target, you're looking at a 50% downside. So that would also be an oversized profit potential. And so it's all relative, and that's why I always talk about beta adjusted position sizing. And that's a way to stay into high volatile stocks that have big price swings, or securities, like Bitcoin, things like that. You try to trail, buy a Bitcoin or the Bitcoin ETF, GBTC, and trail a 5% stop. Good luck with that. You're going to get stopped out almost on a daily basis with just the back and forth, grind. You have to use larger stops, larger price targets, and to accommodate for the additional risk on those larger stops, simply take your position size down to where it needs to be. So you're going to lose your max your max threshold in dollar terms, not percentage terms. Okay, hopefully that makes sense. WNDW. This is Solar Window Technologies, I think it's one of the hot Reddit stocks. Nice big down day today, coming right up onto this trend line here. Let me tighten it up, clean it up just a bit there. Yep, come in right around there. So depending on how I draw it, close enough. We're getting close to that trend line right there. Negative divergence on that one. You'd probably, if you're interested, want targets. I'd say this would be your first target zone right there, with a preference on that lower level there, about 758 right there. We may get a reaction off the top of that zone, but I'd say down there. And I don't know what the fundamentals are. I'd have to look into this one. But when this, low quality stock bubble pops, a lot of, again, I don't know what the fundamentals are on this company, but I know a lot of these lower grade, lower tier stocks have been the ones running up lately. I think this one could come all the way back in here at about 327 or so, and that would be a drop of about 80% if and when we get there. But again, this, if there's a lot more to go in this bubble, like I said, I've lived through 1999, and one thing about stocks is just when you thought they couldn't go any higher, or valuations couldn't get any more unreasonable or insane, they just kept going up. So never short something just because you think it's up too high. You need a technical case, and I just gave you the case right there. Break of that trend line. GRWG stood out. Grow Generation Corp. This one's been strong. And here's your primary uptrend line right there. Certainly a target for a pullback, with a secondary trend line right here, and support level right there about 53.77. So a break of that 53.77 could do the trick. But here's what we have. We have a bearish engulfing candle put in yesterday. So far, with a nice follow through candle, we're down 13%. That's confirmation to the bearish engulfing. And basically, if we can take out today's low of 52.26, that will have taken out that 53.77-ish minor support. probably bring us into this trend line. I wouldn't even bank. I wouldn't even bet hard on a break or I'm sorry, a bounce off that trend line. We could get it. And if you're bullish and you're looking where to buy this stock, step in there with a stop below. I would hold out for a break of that trend line. There's big divergence here, and it's a matter of time. And again, with a bullish engulfing candlestick as a potential topping stick, and so far confirmation, and the big negative divergences that say that tells me this one can come down quite a bit more. Again, it's going to take a pretty healthy correction in the market, especially a lot of these junk lower. I don't know if this one's a low quality stock or not. I can't speak to the fundamentals because I haven't looked into it, but I can tell you it's a nice looking setup, or I wouldn't be talking about it here. As far as long trade ideas, there's Bombardier, or as the Americans probably call it Bombardier, I think is what I've heard a lot of people say. It's a French Canadian company. These are the U.S. shares, BDRBF. It had a nice positive, nice divergent low, big positive divergence back here. It also had it here and it broke out, but what happened is COVID hit. So, this one had, and that's a common theme. A lot of stocks that I had bullish setups on back in the fall of 2019 or so, and it broke out, started to run, including the lithium stocks I was bullish on back then. But then COVID hit, knocked a lot of stocks out. But then what I noticed, a lot of those that had constructive charts back then, once that correction ran its course, they later on bottomed and they've been strong. So big divergent low. Bottom line, that's what I wanted to point out there. Big divergence, breakout, and it recently took out this 3842 support right there. Any pullback to that level would provide an objective entry. So this one I think looks one of the better looking charts. I'm just, like I said, I've been struggling to find objective long entries. And if you're up north, north of the border, you're in Canada, you want to trade BBD.B.TO. I think they have two. You must have a couple share classes. This is their class B. Trades on the Toronto Stock Exchange. Anytime you have the .TO, that's Toronto Stock Exchange. There's your divergent low right there, positive divergence. Same company, just different share classes, different trading on the Canadian exchange, and that's the big level right there, about 59 cents. Always be careful of any low price, any penny stocks. Be careful. I do not know what the fundamental situation is on this company. You might want to do your due diligence, but this one's close to that 59. We're at 63 now, so I think it's an objective long with a stop somewhat below. Have to say I'm not crazy about market conditions personally. I'm going to pass on this one right now. A lot of times I do that, then they end up taking off, but I might revisit it. Let's see what the market does. As I started the video out, the market is in a potentially precarious technical point right now. And so breaks down. The support goes on Apple and Tesla, and we start to get a decent sell-off. It's probably going to take a lot of things down with it, but sometimes these low price ones, they fly under the radar, they do their own thing, they don't have a high correlation with the broad market. So it's possible that this one maybe it's priced for bankruptcy at that price. I want to say that, so that's why you want to do your own due diligence. But if not, longer term, I could see this one heading up here to at least that 150 level, and that's pretty good run there, about 150% if it does that. All right, let me wrap it up here, get the video out to you guys, and if I see anything else, I'll be sure to let you know. This has been Randy Finney with Right Side of the Chart. Have a great day.